joining us. It's not a word that financial experts use lightly, but a lot of them were using it today. Panic. Around the world, stock markets continued their terrifying plunge. Toronto's exchange dropped more than a heart-stopping 1,000 points in early trading, its biggest drop ever. We'll look at why more people are now predicting a worldwide recession, including for Canada. We'll look for advice on what you should do now and show you how it's all ratcheting up the pressure on our political leaders and changing the dynamic of the campaign. And our coverage begins with Mike Drolet, who's at the Toronto Stock Exchange. Mike.
Kevin, it was another roller coaster day for the TSX, dropping precipitously as soon as the opening bell rung, losing 300 points in just over 10 minutes at one point. At the end of the day, the TSX lost 573 points, which is almost a three-year low, and the Dow lost 370 points, capping off another terrible day in the markets.
It was billed as a mini-summit to make sense of the Canadian economy. 5 of Canada's top economists spoke with thousands of investors, all looking for answers and insight. But with predictions of a mild recession to mild growth, who do you listen to?
Well, I think that's a million-dollar question. Unfortunately, I don't know that anybody knows definitively where it's going to end.
No consensus in terms of whether we're going to have declining economic activity for the next 2 to 3 quarters, but I think everybody has agreed that the growth over that period of time is going to be minimal at best.
And this was before the markets began to tumble. It was a turbulent morning for the TSX and for the Dow, which fell below 10,000 points for the first time since 2004. This professor says the Toronto market is more volatile than the Dow because it's based on commodities. And since all energy stocks, including oil, took a downturn, so too did the TSX. Put it simply, the market dropped because investors lost confidence and pulled their money out.
People are selling. I mean, prices are determined by the old classic supply and demand, buyers and sellers. And if too many sellers show up and not enough buyers, or buyers who aren't willing to pay current market prices or looking for bargains, prices are going to drop.
So while Americans are suffering primarily in the banking and real estate sectors, Canadians are operating on fear. Many are selling everything, even at a loss, just to get out of the market. But make no mistake, experts say, the downturn in Canada can be traced directly to the looming U.S. recession.
If Wall Street had been less reckless, or if federal regulators had been more attentive, the financial crisis could have been prevented.
In Washington, Congress grilled the CEO of Lehman Brothers, whose bankruptcy last month set in motion a series of collapses of huge Wall Street firms, which in turn led to the $700 billion bailout package of the banking industry. Richard Fuld earned $52 million last year, but he says his pay had little to do with Lehman's collapse.
I want to be very clear. I take full responsibility for the decisions that I made and for the actions that I took.
Now, if what Fuld made last year isn't shocking enough, consider over the past 8 years he earned about $500 million. Tell that to Main Street. Now, to put the losses of the market in perspective, the 1987 crash saw total market value losses of 22%. Now, on June 18th of this year, the TSX hit an all-time high of 15,073 points and plunged briefly today to 9,618. So from its absolute high to its absolute low, it lost 36% of its value, which is equivalent to $571 billion. Kevin?